Last time something like this has happened, the stock market has crashed. AI has taken the world by storm, and every company that says that they're doing something related to AI, they're seeing their stock prices to go viral. Investors are throwing money into that stock, imagining that this company is going to make a lot of money sometime in the future. And a lot of people saying that the market has turned into one giant bubble, and if there is a bubble, bubbles turn to burst every single time. Look at Palantir, for example, one of the most famous AI stocks that's out there. Before 2024, nobody was talking about it. Today, it has grown by over 600%. It's probably one of the best investments somebody could possibly make. And if you want to justify its earnings, then forget about that. Look at Broadcom. Prior to 2023, it wasn't trading at that much. Today, it has grown by 600%. I can confidently tell you that this was probably one of the best investments out there because there is a huge shortage of chips in the market. And if you want to power AI, then you certainly need a lot of very advanced chips. Tesla also presents itself as an AI company. And over the last couple of years, since AI became a thing, its stock has increased by 182%. Nvidia is, of course, the crown of the AI, and it has grown by 1200% since 2022 and became the world's most valuable company. In 2022, I wouldn't have imagined that there is going to be a company that is worth about $150 billion and will take over Apple, that back in the day was the most valuable company in the world. And today, Nvidia worth over $4 trillion. That's why a lot of people are very concerned that this AI thing is turning into a bubble. Should we sell our stocks? Because the bubble, sooner or later, is going to burst. In 2022, there was a massive stock market crash. The stock market has crashed by about 25%. A 25% is a massive crash in the market. People have overpaid for a lot of stocks during 2020 and 2021, and then we realized that those stock prices are not being backed by very strong earnings. And if you're not making money, then you cannot justify those stock prices. You see, when we look at the stock market, we always have to think like investors. And as investors, we don't look at the technology itself, even though that is also very important to look at. The most important indicator is how much that technology is earning us. If you're making the best technology in the world and it's not making money behind it, then why are we supposed to pay for that? And that's why when a technology comes out, you have to think about how much that technology is going to make you. And that's why when stock prices increased dramatically in 2021 and 2022, and then we realized that it's not being backed by earnings, the entire market has collapsed in order to justify the earnings. When stock prices increase dramatically, there are two things usually happens. Either it's backed by earnings, so earnings rise as well and stock prices stay the same. But if earnings do not increase alongside stock prices, then stock prices go down and fall to the level in order to justify its previous earnings, or the current earnings in this case. At its peak in 2020, PE ratio of the S&P 500 was at about 38, which is one of the highest in the history of the S&P 500. It's not backed by earnings, investors massively sell their stocks, and by the mid of 2022, it goes to 19. However, in November 2022, ChatGPT comes out and it changed the world. It shocks the entire market. It shocks the entire tech industry. And the stock market since then has grown by 50%. And if you look at the PE ratios have also grown from 19 up to 30. And that means that this 50% growth that has been happening since the end of 2022 or the beginning of 2023 is not being backed by earnings. And this is one of the fundamental reasons why a lot of experts warning us that it is turning into a bubble because it's not being backed by real earnings. On the other side, you have those people who say that earnings are going to follow sometime in the future because this technology has the potential to make those earnings. However, investors today are paying for these stocks as if these companies have already made 100 times more than they're making today. The best example of the bubble is Vistra. This is pretty much a very traditional company that generates electricity. When we have a very traditional company, especially when it's very capital intensive because it needs to build those huge electricity plants to generate that electricity, we don't expect those companies to make a lot of money. We don't expect these companies to dramatically expand all over the country or all over the world because the cost of expanding that business is extremely expensive. Compare that to an internet company or a ChatGPT that can easily expand. The more users you add to ChatGPT, it doesn't cost as much as you have to open a new entirely power plant in order to provide electricity for dozens of more homes. Up until 2024, the valuation of Vistra was very moderate at $10 billion. And for such a company, its PE ratio should be at around 10 because we don't expect this company to make 100 times more money sometime in the future. It's a very well-established traditional business. For such companies, a PE ratio of 8, 9, or maybe 10 is very reasonable. If it's a technology company that has a huge potential to grow, then we can actually give it a PE ratio of 20, 25, in some cases maybe 30. But for this company, not that much. However, at the end of 2023, there is a lot of news that the new databases are going to power the AI revolution. But to power those data centers, you need a lot of energy. And that's why a lot of investors started buying and investing in companies such as Vistra that provides that electricity. And since then, the stock has grown by 756%. Did Vistra suddenly make a lot of money? No, its earnings are growing gradually, like they're supposed to be. But because now people claim that Vistra is going to power the AI databases, a lot of people are investing in them. And this is not the only example. The market today is filled with such examples. In fact, the AI bubble today looks very similar to the dot-com bubble that happened in late 1990s. In 1995, Netscape comes out and it changes the entire course of the history. Internet existed way before 1995, but Netscape came out as a browser and made it accessible for the average person to use the internet. Before 1995, it was very difficult to use the internet. That's why after Netscape, you had a long list of internet companies that came out and changed the course of the history. That's when a lot of investment, a lot of money started pouring into internet companies. Companies such as Amazon and Google and a long list of other companies came out in 1990s. Every company would add .com at the end of their name and their stock price would grow dramatically after that. But then by 2000s, people realized that we have such high stock prices, but these high stock prices are not being backed by very strong earnings, which means that these stocks are overvalued. And very smart investors, especially those who bought those stocks very early, they started selling those stocks massively. One of the people who became a billionaire as a result of that was Mark Cuban. He had a lot of Yahoo stocks since he sold his startup to Yahoo, and he massively sold all of his stocks in the market because he knew that all of these internet companies, yes, they have very high valuations, but these high valuations are not being backed by very strong earnings. By the year 2000, the bubble burst and the S&P 500 falls down by about 50%. The real question is that, did internet overpromised and underdelivered? Well, of course not. Internet companies today make much more than anybody would have imagined back in 1990s. So what exactly has happened? You see, when a new technology comes out, there is a lot of hype around it, and a lot of people start throwing theories that these corporations or this technology is going to make an X amount of money. And maybe it will make even far more money than that. But because everybody is so focused to make money in the short run, everybody invests in them. And that extra investments creates a lot of demand for these stocks, which hype their stock prices to levels that we cannot possibly imagine. But then we realize that in order for these companies to justify those stock prices, they need time to develop that technology to the level where it's going to be profitable. When that realization happens, early investors start selling their stocks massively, and that's when the bubble burst. And then after that, these corporations will start working on how they can monetize this new technology, and that's when that technology becomes mainstream. And that's what happened with the internet. In fact, most of the internet companies that you know today did not even come out in 1990s. They came out after the bubble burst. For example, take Google. It was founded in 1999, but it was a very little tiny company. It only became mainstream after the bubble burst. Or take Facebook. It came out in 2004. Instagram, WhatsApp, pretty much most of the internet companies or technologies that you use today came up after the year 2000 or after the dot-com bubble burst. The introduction of ChatGPT looks very similar to the introduction of Netscape. In November 2022, when ChatGPT came out, everybody realized that AI is the next big thing. Because everybody thought that you can literally put AI in the hands of the average person, just like Netscape put the internet in the hands of the average people. So a lot of investments poured into AI, which drove all of these massive stock prices. Are we in a bubble? Most certainly we are. But the real question is that when that bubble is going to burst. The bubble has been going for the last 2 years, like the entire 2023, 2024, and now 2025. Maybe it will continue until 2026, maybe even 2027. You cannot possibly time the market perfectly. You can look for the clues, you can look for the indicators, but timing the market perfectly is almost impossible. But there is a big difference between the dot-com bubble and the AI bubble. When Netscape came out in 1995, the largest companies back in the days were Walmart, General Electric, ExxonMobil, and all of these corporations did not jump into the internet. They continued with their own business as if internet is just another thing that is going to fade away. They did not take internet seriously. If Walmart, for example, invested in the internet, Amazon would not exist today. If General Electric realized the potential of the internet and they would have developed, for example, a smartphone, then Apple wouldn't be the largest company in the world today, or one of the largest companies in the world. Or if General Electric invested in cloud computing, Microsoft wouldn't be one of the largest corporations today. Because the largest corporations ignored the internet, a new entire industry was formed, and a lot of these internet companies started going public one after another, and a huge bubble was formed on the side, which burst by the year 2000. If you compare that to today, since the introduction of ChatGPT, every major company in the world has been massively investing in AI. Microsoft, Apple, Tesla, Amazon, Meta, you name it. Yes, some of these companies, for example, such as Apple, are far behind in that, but they acknowledge that and they realize the potential of AI and they're investing in AI. They want to compete in AI. Take Microsoft. It is one of the largest stakeholders in OpenAI. Google realized their mistakes, and everything they do now is that they're integrating AI into every single product they have. Tesla realized the potential of AI way before 2020, and today Tesla says that we're not a car company, we're actually an AI company. Yes, there are some exceptions. For example, Nvidia became the world's most valuable company because of AI, and nobody heard about it. Not nobody heard about it, but it wasn't literally a popular company prior to 2022. It was very popular among the people who would do a lot of gaming. Even if a bubble is being formed, it's a small bubble on the side. The corporations that are investing in AI and are creating this bubble already have very well established business models. Take Microsoft, for example. They're not making a lot of money from AI. They already have a very good business model. They're already making tens of billions of dollars or hundreds of billions of dollars in revenue every year. Or take, for example, Google. Google is massively investing in AI, but they have a proven business model. So if the AI bubble is going to burst, it doesn't mean that they will stop making money from advertising. It doesn't mean that Microsoft will stop making money from cloud computing or cloud services. It doesn't mean that Amazon will stop making money from their e-commerce business. So the AI bubble burst is going to be a lot smaller than the internet bubble burst. If we assume hypothetically that the bubble is going to burst tomorrow, then the PE ratios, for example, are going to go from 30 to 20, because we are going to assume that earnings are going to stay the same. that will be around a 30% crash in the best case scenario. The average PE ratio for the S&P 500 is about 15. However, over the last decade or so, the S&P 500 have been dominated by technology companies. Take the top 10 largest companies in the S&P 500 that represent 40% of the entire index, and 9 out of 10 of them are technology companies. And tech stocks have a PE ratio on average of about 25. That is the normal for them. Technology companies have a much bigger potential to make more money in the future than traditional businesses. So it's normal to assume that the PE ratio or the average PE ratio for the S&P 500 has grown slightly above 15, maybe to around 18, 19 or 20. So even if it falls down to 20, the crash will be in the best case scenario about 30%. But that's in the best case scenario. It might fall to 21, 22 or maybe even 25, and that crash would be around 20% or 25%, as much as it was back in 2022. On one side, it looks very similar to the dot-com bubble. On the other side, it's very different because the investments are coming from the largest companies today in the world. So what I'm doing in this, or my strategy, is that I'm not selling my largest tech stocks, for example, such as Microsoft, Apple, and Tesla, because even if the crash is going to happen, since I'm a long-time investor or a long-term investor, I would keep my stocks over there because I know that they're going to recover. I cannot possibly time the market perfectly, but I can predict the market over the long run. But if we're talking about individual AI stocks, then I wouldn't actually buy any of those stocks right now. In fact, I would simply wait because they're extremely overvalued. And when the bubble bursts, you don't know how much they will collapse. They can collapse by 50%, 70%, 80% because they're purely AI stock. Their stock prices have risen simply because of the hype that has been happening over the last 2 years, which means that we might be on the brink of one of the greatest opportunities out there. If you have missed your chances to buy those stocks when they were selling at a fraction of the price 2 years ago, now it might be your opportunity. Save your money, educate yourself, and get ready for the best opportunity that is waiting for all of us. Thanks for watching, and I will see you in the next one.